When the moon is in the seventh house, and Jupiter lies with Mars.
Happy Halloween, everybody. This is Gil, and I'm in my usual place, and Dr. K's in his usual place, and we're watching the market do its thing on a wild Halloween. I had a good time this morning watching my kids head off to school with their respective costumes. So my son was a homemade cactus, and I thought that was kind of interesting. I just was afraid that if he went to school, the kids might call him a big prick, but I don't know. But anyways. Can I say that, Dr. K? Anyways,
legal over in this country.
Dr. K, you're there, aren't you?
I am here in the ether.
All right.
Ethernet.
What's that?
In the Ethernet.
You are in the Ethernet. Good. Anyways, what's your take on the market? I'm just curious. We're seeing some leaders get whacked around. We've got QE still on full tilt. But, the underlying conditions in the market seem to be deteriorating. I'm just curious, what's your read on that right now?
Yeah, I mean, every time the market has corrected, its typical, 3 to 5% off the peak, and it's done that a number of times this year, the leaders get smashed, and it makes it, for the environment, the challenging environment it's been, I mean, for people who want to be able to conventionally trade and pyramid a name, it makes it very difficult, because a lot of these names, when the market pulls in, 4 or 5%, these names will get hit easily, 15, 20% or more, often forcing one out of their position. So it's kind of an upside down market where, the prettiest stocks who have the ugliest patterns often find their lows at those ugly junctures, and stocks that one is patiently trying to pyramid or use the 7-week rule often will break that rule, or the markets will look like everything's falling apart based on the action of the leaders that just might scare someone out of the position prematurely before it even hits their sell stop, because we've seen the market erupt a few times since 2009, since quantitative easing began. And when it really when it falls, sometimes it falls very quickly, very precipitously, and takes all the leaders with it. So I think we're conditioned to remembering those times and being concerned that this is going to be another one of those times. So I think the way to play this kind of market is to either be capturing your profits, at least take half off the table when you've got profits, and try not to get sucked into no man's land, which is getting scared out of your positions only to see them go bounce back and go to new highs. So either you sell on a strength in this environment, or you try to a stock like Tesla was very profitable playing it and pyramiding it over the last few months. And there's a couple other names where this could have been done as well. And these are the kind of names that make all the difference to your portfolio. Facebook had a gap up 2 earnings reports ago, and since that point, it has not violated its 50-day moving average, and so this is a potential leading name that might continue to move higher. It did report earnings. It's bounced off the 50-day. It looks like it's getting clearly some institutional support. The question is, people are nervous about valuations where the stock's trading, especially if its younger segment, if the growth rate of its younger segment is slowing, because that's really an important piece, a vibrant piece to the Facebook story, is that the newer generation embraces Facebook. They use Facebook. They spend as many hours on Facebook as our generation was spent watching television. Statistics were horrifying, where the average public school student was spending 6 to 8 hours a day watching TV. But at least now that's been replaced seemingly by Facebook, which is a bit more constructive in terms of personal interaction, and instead of being a passive activity where you're just staring like a zombie at the television, Facebook requires interaction, social interaction, creativity, and all that sort of thing. So at least for the new generation, I would argue that Facebook provides a valuable service. All the social networking, in a way, is certainly more constructive than than sitting like a zombie watching television.
Do you mean like that girl that committed suicide after being bullied on Facebook?
Yeah, the bully thing. The bully thing is a big problem. Actually, it's a whole different story, but that's a huge problem, not just in the States, but in other countries. And when you're at that age, you're much more sensitive and much more prone to taking the situation taking it much more seriously than it really is.
Yeah. But what's interesting is my kids aged almost 13 and 15. Neither one of them has anything to do with Facebook, and my daughter tells me that people who are on Facebook don't have a life. So I thought that was interesting. But I would argue that they have an idealized life, I guess, on Facebook, which I suppose is what you can create. But it's interesting that none of they and their friends do not spend any time on Facebook. They do use other services like Twitter, I think, and some of them use Instagram. In any case,
I think it's hard to make any generalizations because there's hard to make generalizations because there's a billion people on Facebook.
Yeah, you're right, exactly.
And people use it for different reasons. Some infrastructures aren't really there, so Facebook is the infrastructure for certain countries. Okay.
Yeah. So bottom line is, would you be buying the stock here off the 50-day?
Well, if I had bought on the Bible Gap Up, and I would be using the 7-week rule, and I would still be sitting on the position, and I might use a day like today, depending on where it closes. I'm going to wait closer to the close, and if it can finish where it's at or better, then I might actually add a little bit to the position. Okay. Just looking at the volume levels right now, it looks like we're going to get we're definitely going to get a pocket pivot if it can close break even or higher. So that would be a classic buy point off the 50-day.
Yeah, I suppose assuming it doesn't reverse from here and close much lower, but because it's only a couple of bucks off its low for the day. Let's see, what else is going on here? We got silver on a pocket pivot yesterday. Precious metals reacted kind of interestingly, but look at the gap down today. So you had a pocket pivot yesterday, and it's gapping down today, as is gold. And with the market coming off, I'm a little bit curious about this I find this curious because if QE is firing on all cylinders, why are these breaking down and why is the market selling off? And supposedly it's month end, so you'd expect month end window dressing, or is it month end window smashing? I don't know. It seems kind of strange, as if the market is seeing something that's really not what anybody's really thinking about right now or talking about, and that seems to be what's happening right now. The way I look at the market on the NASDAQ, you have a stalling day here, you have a distribution day here, you have a stalling day here. So that's out of these 4 days here, you have 2 stalling or churning days and stalling, churning, whatever you want to call it. Slap whatever label you want. A distribution day, even though you did close at the peak of the range on higher volume. So it could be either way. And then you have a pickup in volume yesterday, where the market opened up early in the day and then reverse to the downside, so you get an outside reversal on heavier volume. Today you're down on, we're running heavier volume right now, aren't we, Dr. K? Yeah.
Probably, a little bit.
Pretty good rates actually right now. Up 11.57% on the NYSE, NASDAQ 23.58, but NASDAQ's down only 459, so it's not like it's getting smashed here. But you're seeing, some leaders coming under some heat. So, the market's entitled to a pullback, and maybe it does that. Maybe some of these leaders come in and then set up again, and so on. And that's, what you see happening. So just remember the ugly duckling theory, that when things look about as ugly as they can get, that might be the time to step in and buy something. And, my technique in this market has been to watch for stocks coming off of a moving average on a pocket pivot, sort of rounding out the lows of a base. So an example would be the last time we sold off in August, I was in the hospital somewhere around the 12th, right in through here, and a stock like Yelp was getting real tight, and you had a pocket pivot here, and the thing took off. And so if you're buying it here, the market actually bottomed out right about then. I think it was the end of August. It bottomed out, and the market turned higher, and you could have played that very nicely. So more recently, we had pocket pivots in Silica, at the end of September. Coming out of there, you had SunPower, which also had a pocket pivot, but now it's getting hammered after earnings, but it had some pocket pivots in here. So you're better off trying to find these sorts of patterns as the market gets ugly, and coming in and buying lower rather than coming in and trying to buy at the breakout, because as Chris was saying earlier, trying to pyramid positions doesn't really work in this market. So if you know that, you want to adjust your tactics here and try to buy earlier, and then sometimes you run up after breakout a little bit, I'll sell into that and then let it come in, because they usually do. And that's basically been the story of this market. And you have to anticipate the run-up, sell into the run-ups, anticipate the movements as the stocks are rounding out, and come after them that way, because it seems that coming after them into strength is just going to get you crossed up. And we know a number of people, some are up for the year, some are down for the year pretty good, because they've been hit on some of these stocks that have gapped down. I know a lot of people were very slow on the NQ, and as I pointed out last week, we had some of this about it. You had the pullback here to the top of this flag breakout, and then it held the 50-day. So to me, this is a pullback to the top of the flag, and then holding the 50-day. You buy it here. So we actually bought it coming up about 2009, and it ran up. Should have sold that breakout in hindsight, but as soon as it could not hold, you come down 3 days here. My feeling is you have a low here of 2260. Down 3 days, by the fourth day, this thing needs to turn around. And if it breaks one of these lows here, you either got 2260 or 2265 in here, and it can't. I'll just sell it. And on that day, I remember the stock started to come down to that level. I got out at 2248, and I'm just quick to sell if they don't do what I'm expecting them to do. Because it's that kind of market. I had some of this Finisar, and I was actually buying it on the basis of, in my view here, this is your breakout week. So you have an up volume week here. That was 4 weeks ago. You have a short little flag of 4 weeks forming, and this is a breakout. New closing high on the weekly chart. So coming in the low 24s. And the stock then breaks out. Of course, IBD is telling everybody about it up here. And so if you buy it up there, the stock fails immediately. As soon as it comes down to that 24 area, I'm pretty much out of it. And I'm not going to sit around and get slapped around on this thing if it fails on a breakout in this particular market. But this points out that you got to set your stops, and when you take a trade, you better decide where you're going to sell that thing if it doesn't work, and number one, what is your objective for the trade? What do you expect the stock to do? If it doesn't do that, if it doesn't do what I expect it to do, then sometimes I'll just sell it on that basis. Now, the third component then is setting your stop. Where does it have to go to before you sell it? And when it hits it, you stick to your stop, and you're gone. No questions asked. I'll get emails from people, oh, this stock I have, it's down 15% from where I bought it. What do I do? Well, it's a little bit late to figure out what you're going to do now, because you already broke a number of levels of support. You broke a percentage, maximum percentage breakdown in a stock that you're going to allow based on, alleged O'Neill stop loss principles of 6, 7, 8%. I like to keep my stops a lot tighter than that. So really, that's what you have to do in this market, and you really have to run it tight, because it's not easy. It's not an easy market. So, and I know a lot of people who've had trouble trying to pyramid positions, and they just get slapped around. So, I was joking with Dr. K this morning that I had to file documentation earlier this week, changing my status from an O'Neill trader to a swing trader, because on a practical basis, I've become more that way, trading stocks for a few days to maybe a week or so, and sometimes less than that, depending on the move that I'm getting. So, anyways, it's a difficult environment, and I think you have to move quickly. And we've been talking about that for a while. So, anyways, somebody's asking me, what is a MACD stretch? That's a good question. I want to show you. Chart of LinkedIn here. When I get the MACD, this morning the thing broke down to 220 and turns right back up to the upside, and then it runs up to 226, and you get a stretch on the MACD lines. You can see here, these are if I blow them up, you can see these magenta lines really peak out. And so sometimes when I see that, I'll just short the stock into that. And I've been trading this thing. I still think it's headed lower probably. I don't know if it's going to try and build a base or not. If you want to sit around and try and figure that one out, be my guess. But that's what a MACD stretch is. And Dr. K and I use variations of this sort of chart, I think. And you can see now, it's giving you a short-term cover signal. My guess is you'll see it roll over again later on in the day, probably. I don't see the stock really in a position to rally. I don't know. Maybe in this QE market, that's what happens. What you can see here is I thought we might undercut this 213.50 low, which I still think is going to happen. I just don't know if it rallies here first. But you did undercut the closing price of 10.9, and the stock was able to rally from there. So I don't know if that's the operative level for an undercut, but I would think it would come below this 213 low and drop lower and maybe meet up with the 200-day. But this is a broken pattern. I don't see how you can see it as anything but a broken pattern. Dr. K, can you paint a positive picture for LinkedIn right now?
Not right now, no.
Yeah, so I mean, at best, you got to let it heal and build a new base. Maybe it does do that. Somehow I think not, though, because I think they're peaking out here. The CEO was on CNBC yesterday babbling about China being a new opportunity for them. Well, if it's such a great opportunity, why aren't they raising their guidance on that basis? They're not, and so you got to wonder, exactly what the deal is there. And I would suggest that it may or may not be a big opportunity. China was supposed to be a big opportunity for Apple back when it was pushing 700, and that didn't keep the stock from blowing apart back then. So you got Apple coming up, up the right side of this big cup. I don't know. You're retracing about half of this move down, so I don't know if you're getting to a point where there's resistance here. You get a big outside reversal day. We'd hope that you might see a stock like Apple lead the market higher and take over, for some of these other stocks like Netflix, these so-called four horsemen, Netflix, Facebook, which is faltering a little bit here, but who knows, maybe it's okay. Tesla, which violated the 50-day moving average 3 days ago on Tuesday, and then, of course, the ugly duckling theory comes into force here, where you see the stock turn around and go higher once it violates the 50-day moving average. But in my view, this thing's either building a new base or it's starting to top. And one of the things that bothers me here is on the weekly chart, you're starting to see a lot of red volume. So I would say that the stock has, in fact, changed character. And I think on that basis, you have to be cautious here. And if you own the stock, hopefully you were out of it earlier. We haven't liked it for a while. And it just looks like it needs time to heal, and going into earnings, who knows what's going to happen. So, are you feeling lucky, punk? Hold it through earnings. So, or if you bought it, down below 100 and you're still holding your position, you could give it some room on that basis, So, definitely up to you. Let's see. No, we will not be passing out any candy. I did want to talk about something. I was on the chat room just briefly, and yesterday we had talked about Baidu as being a short on the Bible gap up. There's the Bible gap up yesterday, and it reverses and comes in. And I just think a stock announcing 5% earnings growth is not. The gap ups in those are suspect. The essence of a Bible gap up is that it's going to occur in a leading stock with sound fundamentals and all the other goodies, with it. And in this case, a 5% grower somehow strikes me as suspicious. So we were talking about this, how to handle. Now another one that 8% grower here is Expedia, and it's gapped up. Let's take a look at the daily chart. It's gapped up here. I don't know what the deal is with this. That's an amazing gap of 16%. And so this morning I was talking about using the 620 line here. First you got a sell signal here, but it turns, and you get a quick cover. It moves up, and now it's rolling over again. So I'll work a short position in this as a stock. Let's see if I can make it easier to see. It's kind of, I don't know what the deal is here. I'm gonna have to, there we go. So you can see it now. It's breaking down through the 20 period line. The 6 is breaking down, starting to come off. So that's starting to work now. So if I put I actually put a small position out on this break. Sometimes the first one it takes 2 or 3 maybe to really get going to the downside, and it runs up again to the highs, and now it's starting to work. So it's possible to maybe get heavier on this using 58.70 as a guide for a stop. Now you could use the high of the day, because that's really only about 2.5%, 3% max, I think, away from where it's trading right now, and that's another way to handle it. So, on that basis, you can set your stop accordingly. But I don't trust some of these gap ups. And what happens in this market, you've probably seen it more than a few times, is that you get these the selling into these upside moves following earnings, and you've seen that in a number of stocks. For instance, a lot of people wanted us to put save on as a viable gap, and it has moved up, but look at what this thing does after earnings. It's all over the place. So looking a little bit funky there. And there are a number of other stocks that have gotten whacked on earnings. Yelp trying to hold the 50-day moving average. I don't know if it's going to, but my thinking is if you're losing 4 cents a share when you're supposed to make 1 cent a share, and you're trading at an infinite P in this market, if we start to come in, then I think you're going to start to see these high PE stocks, like LinkedIn, 14% earnings growth estimated for the next quarter when you're trading at about 112 times estimates. It's like, you better start doing something to pump up some huge growth. Otherwise, I think you're headed lower. In any case, let's see. Somebody asked, why did you consider the BGU and Baidu as shorter? Well, I just answered that. Weak earnings. Why is a stock growing earnings 5%? Is that going to be turned into a big leader? I don't know. It just looks suspicious. And then I can use my 620 chart to to come in at the right time and control my risk. So I can test it. If we look at Baidu yesterday, for example, which I was short, I think it's coverable now and take your profit. But yesterday, let's see, you had the gap up move, 167, and it's early in the day, and you can see right around 5 o'clock, stock has a 620 sell signal, and you get a couple of blips up into the 20 period here that could have been shorted into, and then it breaks down. And by the close, you're kind of hanging around. You're trying to rally back. But today you're down, another 2.5%. You're trading at 160, but you did bottom out somewhere around 158. So, so that's a way to work this. And I am day trading some of these, or 1 day, 1 or 2 day trading these, and I think that's been the tactic or technique in this market that has worked, and it's worked for me. And like I was saying earlier, I have to. I can't call myself an O'Neill trader really right now. I'm taking a much more short-term view, although I'm using the principles of O'Neill trading in terms of the types of stocks I'm looking for and the types of setups. So anyways, Dr. K, are you there still?
I certainly am.
Okay, how do you factor the volume in after hours at all in Facebook? It was up 17% and then sold back off on over 38 million shares in after hours. Does it factor in your volume analytics and models?
Yeah, I mean they do account for that on the charts afterwards.
Yeah, so
yeah,
it's here.
Of course we factor that in. I mean that's valuable volume data, and that's why you see on a chart before the close, sometimes the stock will have a pocket pivot as a clue, but keep in mind that the day after they'll factor that after hours volume in. So it's possible, the day after the stock might look like it had a pocket pivot, but it really didn't until after the close.
Right. So today, again, trying to get some support. We'll see how it closes, But everybody loves the stock now. Nobody loved the stock on the Bible gap up, and everybody loves it now, just like Tesla. I've noted if I make a comment about selling the stock, the longs get testy, and they want to pretend that I'm short the stock, and of course that's why I'm trying to talk it down. But I have no position in Tesla. It's not set up to be a short sale yet, so there's no way to really be short the stock. The other thing is you still can't borrow it. So I've been curious to see if it's been borrowable, because that would tell me whether there's still a lot of people short in the name short, and hence a lot of short interest, which can hold the name up. Let's see. OCN, potential reversal pocket pivot. Well, you tell me. If the stock trades more volume than any down day and it closes up on the day, then I suppose you would say yes, right? So, pretty easy to answer that one. Unless, you think somehow we're going to be able to tell you in advance that it's going to close up and therefore will be a reversal pocket pivot, which we don't have our crystal balls anymore. Do you, Dr. K?
I took mine bowling, and it broke.
And you smashed it on those pins there, right? Anyways, Silica setting up on the U.S. Silica Holdings setting up on the 20. Well, you got to pull back to the 20-day moving average. Let's take a look at it on a weekly chart. It's a little bit of a tight, flag. If it closes this week somewhere in here, then you got a couple weeks closing tight. So I still think this stock is viable. It's had a nice move. You come up for a couple weeks in a row, and then you stall out 3 weeks ago. And now here you are pulling in. You notice Expedia is coming off now, 57.84. So my plan so far is working. I don't really have a big position in it right now, but about 4,000 shares. So we'll just see how this plays out. But it's still early in the day. In any case, so it's acting okay, and you notice it is finding support at the 20-day exponential moving average. I found that this moving average line works in this environment. It's sort of an ugly duckling moving average, so to speak, in that the stock will break down. Here it violates the 10-day moving average, but you're not using that as your stop because it hasn't shown that it follows the 10-day moving average for 7 weeks or more based on the 7-week rule. So, but I have noticed it'll drop below it and drop below the 10-day and then find support at the 20-day. A lot of stocks will do this, and then maybe they become viable. But again, if you come in now, I think you're still a little bit earlier. I'd let things settle out and see if you get some sort of buy signal off of the 20-day coming up through the 10-day. So that's what I would be looking for. Somebody says, here's a question for you, Dr. K. Do you need to get that?
No, I don't.
Okay. I love your ringer there. That's definitely an old-timey ringer.
1930s.
Definitely interesting times. Feels like we're in a conundrum between setting sell stops at the 20/50/65-day moving average violations, but same levels apply for BTD entries, which I'm not really sure what that is. Feeling spooked? Any guidance you can offer? I'm not sure what the question is. In terms of what? In terms of not selling out on violations of the 50-day. I don't really operate on the basis of a 20-day violation because my feeling is that's more support level, and so I'm not looking for a violation of that to sell. A lot of times if I'm buying the stock along the 20-day, I'm not selling it, I'm not waiting for a violation, I'm selling it if it can't hold the 20-day, if I'm coming in there and buying it. So that's how I use a 20-day. A violation of the 10-day, I think in most cases for stocks that are really streaking to the upside, the 10-day moving average violation, if you can apply it on a 7-week rule basis, is very useful. So I think, Dr. K, correct me if I'm wrong here, but Tesla, here you had a close below the 10-day, but it never violated, never went below that low. Here you had sort of a quasi-violation in here too, but it's really tended to hold the 10-day, and I felt once it violated here, it was a sell, at least on a short-term basis, and you should be out of the stock. What's your take on this, Dr. K, in terms of would you be using the 50-day as your final sell rule, or would you have used this up at the 10-day as a sign to at least cut back on the position?
Yeah, if you want to be strict about the 7-week, then it does violate the 10-day, and so you'd be using the 50-day. But as I've always said, just because you're using the 50-day moving average as your selling guide doesn't mean you can't sell before it violates the 50-day. And that would include high volume down days off huge. This stock has had a massive run, and I remember writing about this stock how it could very well base because it's at such lofty levels. And this is when it was coming off on some fairly substantial volume. So you can use that as a clue maybe to capture some profits, maybe sell a third to half your position, or maybe sell it all and then wait for the dust to clear until you get back into the position. I mean, right now it's clear that it's going into a basing pattern. We'll see how long this base lasts. If Tesla is a true leading stock, I mean, it has been so far. So my expectation is that it will finish its basing pattern. It will issue a pocket pivot, and you can get back in, possibly at a lower price.
Yeah, at some point. So, that's the beauty of pocket pivots. You can come in and buy right back in, I think, in most cases, and save yourself a lot of pain in the meantime. Somebody asks, is Tesla a double bottom? Well, you looking at it on the weekly chart. Let's blow this up. I don't really think so, because I don't really consider this the first bottom. You closed pretty tight in here, so I see this more as a supporting week. The other thing is on a double bottom sort of formation, what you're going to see is it's going to take 4 or 5 weeks on the first move down usually. Give it some time to really form up. 2 weeks down and up to the middle, and then 2 weeks down, and that sets up a double bottom. I don't know if that's going to work. And if it did break out, it might be subject to failure. So I think you'd have to be careful there. But that's, to me, a double bottom needs to have more work on the left side of the W in the formation. So 2 weeks down, and this to me isn't even a down week. It's basically a supporting week. It looks pretty flat to me. So no, I don't see it as a double bottom. If it was, I don't know how much of a difference it would make, because you'd be buying the breakout, I guess, if you want to believe this is a double bottom and you're into buying breakouts in this environment, which I don't think is too smart. Then you're buying it close to 190. So, it seems kind of silly to even worry about it being a double bottom. I'd be looking for a pocket pivot down along the lows. So MEOH, I don't know, stock's up there. Is it pocket pivoting? It's going to need to exceed this volume here for a pocket pivot. So to me, that's not really a viable situation. What is a 620 line? Well, I use on my intraday charts, I use a 6 period is orange and a 20 period here, and just I'm using it as a short-term. We've talked about this so many times that I feel kind of silly talking about it again. But it's just a 5-minute chart, and we've talked about this as a timing mechanism for covering shorts intraday, and also putting out shorts into rallies. For instance, we can see the Expedia now has come below. It's still holding below, so still holding down. Meanwhile, LinkedIn has turned back to the upside and looks like it's trying to hit higher. I still think the stock's weak, and we'll just see it bop around in here for a little while. But it did undercut, as we talked about earlier, it did undercut that low, the closing low here, so now it's trying to rally. And we'll see what happens here. Anyways, let's see more. Somebody says Yelp priced a secondary at today at 67. So that's nice. Okay, so they dumped some stock out, and I guess it looks like it's holding the 50-day moving average. Depending on where it closes, I guess you might try and buy some. I don't know. What would you do here, Dr. K, on Yelp?
Yeah, it's it's been a leading stock, and it's getting some support at the 50-day. They did have a gap down yesterday on the earnings report, so I'd be a little weary about this one. I wouldn't look to be buying it here. I'd wait for a second buy point to yield this one.
Yeah, same here. So, and I would say if they do price, did they price a secondary? I better check this. Yeah, they priced an offering today at 67, so 3.75 million shares. So, they're dumping more supply, and we'll see what happens there. Anyways, let's see, more questions. We already talked about Silica. It would be a 3 weeks tight pattern on SLCA if it was to close, tight on the week. So I think I discussed that. Do people love it now because people tend to go long too late? Yeah, well, like Tesla, I think people going long the stock way too late, and I don't think it's all that bright to fall in love with it either. And I notice people seem to be more in love with it today than they were, say, when it was under 100. And back then, if you wrote positively, like that article, remember, Dr. Kibbe, we wrote for Forbes, shorts would spew venom at you, and now the longs get a little bit testy. So now everybody loves it. So anyways, OCN has continued with EPS deceleration for several quarters. Now, when do you and Dr. K care or don't care about this WAN rule to avoid or sell such deceleration? Well, I'd say I don't care about the rule. We have our own methods for buying and selling stocks, so why do I need to worry about some silly rule about, if a stock does the hokey pokey 3 times in a row, you sell it on the 4th time it does. I don't know. If you want to go on that basis, go for it. It's not really my cup of tea. I don't think Dr. K would operate on that basis either. So if OCN, decelerating earnings, well, what's the stock doing? It's now it's starting to form a pocket pivot. Okay, so just answer that question. What's the stock doing? Screw the rules. Or these silly rules that I think are weakly tested anyways in the first place, statistically. Somebody's asking me, what do you use as a guide to determine the point at which a stock can hold the 20-day moving average? That would be the 20-day moving average. If it can hold the 20-day moving average, it can hold the 20-day moving average. So, like I said earlier, I don't look for violations of the 20-day. So, thoughts on China, Dr. K? I'll let you go off on this. FXI. What are your thoughts on China here? It's a nice place to visit, but I wouldn't want to live there.
They've been tightening up their money, so that's caused the recent weakness. And obviously, markets want to hear that monetary policy is going the easy direction, but China has been tightening up a little bit. So we've got this temporary setback in the market. If you look at the longer-term pattern, FXI compared to other world markets, it's also been dragging along. It's underperforming most markets. China's got some issues that it has to deal with. So, in the meantime, I'm going to let it do what it's going to do. It's a lagging indicator, so I'm not. It's a lagging market. Therefore, I'm not at all interested in playing it. If the model were to go to a sell signal, it likes the kind of markets that are going to be underperforming. But a better underperformer would be the emerging market MSCI index, and that generally tends to swing in bigger directions. EEM would be one good ticker. And you can see that that's been lagging. It tends to swing wider directions than a lot of markets. But FXI is definitely one of the weakest ones out there as individual markets go.
Yeah, so anyways, someone's saying Tesla turning green, and they're turning blue here. We use blue as our upside color. And yeah, it's turning blue, and someone asks, is it okay? What do you mean, is it okay? It's violated the 50-day. It's making lower lows today. Is it okay? Meaning what? You're just going to buy it here? Look for a buy signal. There's no buy signal here, so there's no reason to be buying it. Especially going into earnings next week. To me, I think that's quasi-suicidal at worst, and at best simply means that you're an avid earnings roulette player and want to take your chances spinning the wheel. So, if that's what you want to do, go for it. But just because it's up here after it's come down for several days doesn't mean that it's all right all of a sudden. So, and definitely not the way we look at stocks. TRN, Trinity Industries, nice move today. It's obviously already forming a pocket pivot, but it's way too extended. RCL, no pocket pivot alert. Why? I don't see where is the pocket pivot. There's no pocket pivot here. You could call this a viable gap up, but I think that I gotta move this off of here. Let me check something here. %2 earnings growth in the most recent quarter. Why the hell would you buy a stock with 2% earnings growth? And and it's not a pocket pivot, so I don't really understand that. The question, Gil, why do you prefer candlestick chart on 5 minutes 620? I don't know. It just gives me a nice visual view. I like candlesticks. I'm a visual guy, so. No, it's because candlesticks, based on my studies, are 68.2789572% more accurate than using bar charts. I don't know. It just gives me a visual view, So I like candlesticks. I think they're cool. So if I can find a reason to use them, I'm going to, just because I like to be cool. So no real reason. If you're gonna play around with stuff, what do you like to look at? What helps you in terms of getting a visual sense of what's going on? You'll find out what's right for yourself. In most cases, the reality is that a candlestick chart doesn't tell you a whole lot more than a bar chart would. So not a huge amount of difference, but they look cool. So, and people always, when you have them on your screen, people always ask you about them. So you can pretend that you have some
some special secret going on here. Someone asked, do you give any weight to the bid versus ask sizing? So, example right now, I don't know. You know what? In the old days, back before decimalization and program trading, I used to watch the bid-ask sizes, but they don't matter anymore because you have machines in there that are watching the market, and they're coming in, boom, 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 as the market moves around and taking offers or hitting bids. There's nothing anymore where, like we used to go down on the floor of the New York Stock Exchange and running around with Louis, or the floor trader there, and you go, how's Cat, how's Caterpillar, and they say, oh, it's 53 1/4 by 3/8, 25 by 75 or something like that, and then the specialist would say, and you got Bank of America as a buyer, below this price, and you've got Merrill Lynch as a seller above this price, and they got this and that. So you get a big picture of the supply and the demand underneath the market, or away from the market rather, and that was useful information back then. And I don't really think the bid-ask size is kind of pointless right now because I think you have machines that aren't really showing any bids or asks, and they're just coming in, boom, boom, and hitting bids and asks as they materialize. Let's see, KOG. I'm going to move this guy out of here. KOG, COG. I like that symbol. Kodiak Oil and Gas. I really don't know much about this stock. Does not hit my radar screen. Earnings coming out, I guess, tomorrow. Is that right? It's just a cheap oil stock and pulling down to the 20-day. I don't really see anything here myself. So it hasn't hit my radar probably because, well, the earnings and sales aren't that bad. But it's just kind of a cheap oil stock. So, I couldn't say buy it. I don't see any buy points in here. This might be a pocket pivot down in here. Let's see. It's a little V-shaped breakout, but it fails. There's really no buy points in here, and I don't really know much about the stock. Do you, Dr. K?
No, it's one of these oil stocks. I'm not real excited about the index in general.
Yeah. Somebody asked, how do you track the dollar? UUP. You can track the dollar with the UUP. So there it is. You can actually see the dollar moving up, which I think is curious. Dollar moving up, precious metals moving down. What does it all mean here? I don't know. SCTY, Solar City. Well, you got earnings coming up. Stock gapping down to the 20-day moving average. It had a big move. For my money, once it clears to the highs here, you just sell into that. So, and I'm not really worrying about it going into earnings. So, let's see. Taser. Taser looks okay. Actually, there's one stock I held into earnings but sold it above 18. I'm just kind of hanging out with this. I'm not really interested in doing anything here with it. Looks good, though. If you bought early in the day yesterday on the base of the Bible gap up, and I believe it was trading around 17 when we put that alert out, then you're in at a decent price, and you can try and sit. But I would think that, now what you got going on here is a breakout, sort of a funky, weird flag breakout. So I don't know, maybe it gets sold into, but it's looking okay. So if you still own it, it's acting fine. I basically sold it right about where it is now yesterday, and took my profit. I like this comment. This is a good comment, Joe. The machines are what Trader Vic called, quote, you better be in the right side of the wave when they start rat-tat-tat-tat at the velocity they move it. Isn't that the truth? The VIX, Dr. K, is getting very tight, very fast. What does that mean? Is the VIX headed lower? Are you going to buy or sell signal on the VIX?
Well, I mean, the VIX is really secondary. The idea is to use the XIV, VXX, and all these derivative ETFs in a constructive way, so you can be profitable. And you shouldn't ever assume that there's much of a high level of correlation. There's loose correlation between the VIX and these other indicators. So the model uses the VIX, but it's really looking more intensively at the movements of VXX, XIV, and then of course it applies to all the other related ETFs because they all correlate.
With the VIX getting very tight here, Dr. K, this person's asking, do you have any research that would indicate this is indicative of a significant turn coming in the VIX when it gets tight like this?
No, it's impossible to really know if it's going to go higher or lower from here. But it's much better to look at the movements of the VXX. That's an excellent one because it's the invert. Well, XIV is the inverse. VXX is kind of the flagship, so it's very liquid, and the algorithm that I have tracks that most heavily, and the VIX indicator itself is really a secondary indicator.
Okay. Oregon Novo. Okay. What are we supposed to say here? Stocks come back up towards these highs. We called it down here. We called this pocket pivot here. So that was a buy point. Now the stock's up. So after that, there's really not much to say about it other than that you're up on the position. You even had a Bible gap up here, I guess, a couple times, and now you're holding up. So, you know, this is great forward-looking technology. If the market rolls over or comes in some more, I think something like this is vulnerable to a pullback. But I would note that it does look like institutions are starting to take an interest in the stock. And recently you had a couple of Fidelity funds move into the stock. And I would say there were 8 new funds came into the stock. If you look at the stock's sponsorship, you can see there are 8 funds in it. 5 of those funds are A or A plus or A minus rated funds. So smart money coming into the stock here. I wonder if that is a sign that we're going to see this thing start to become a performer. But if it is something good, it's still early. So if you're in here, you're doing fine. Not too much to think about there. DDD, both making new highs. They are. You had a weird pocket pivot on DDD, so still following through. SSYS made a pocket pivot here. It's kind of V-shaped, so you know it's not like the stock's been settling down. Did they come out with earnings yet, Dr. K?
SSYX.
No. I think they come out next week. That's what it looks like. So it's a little bit premature there to.
But yeah, DDD did, and it looks like the group is well, at least DDD, Triple D is going higher, and the group itself is in a fairly strong position.
Oh no, another IBD question. FLT, IBD shows the accumulation distribution to be D-. I also see lots of high volume selling in the last few weeks. Should that data influence the decision to buy today's BGU? What do you think, Dr. K? You want me to? Well, it's no longer a BGU because it's filled the gap there. Is it?
Well, no, it's still a BGU because you take it from where it closed the prior day.
Oh yeah, I gotcha. Okay, close down here. Didn't see that. So the fact that it shows, yeah, you are seeing a lot of red volume here on the weekly chart, a couple of big volume spikes, but it did hold up. But the thing is here, if you look at the weekly chart, you might consider this a supporting week. So, you know, you got to look at the weekly chart as well. So, you know, the D- also, you know, I've noticed that stocks can sometimes show C or D accumulation distribution ratings while they're in the middle of a base. So, you know, just go with again, I would say look at what is the price volume action right now with the stock? What's it doing in real time? What is it telling you right now? Instead of trying to apply these like overarching rules that, again, which I think are based on scant and really weak statistical analysis. So I would just go with price action. You know, no reason to like try to overthink it. If you like the stock at this point, I think if you're buying it here, then the top of the base it should hold, which would be a high of 114.16. So it's only a couple of bucks or so below where you would get stopped out. If this is going to hold, I think it should hold the peak here from here. Since it's already tested it once intraday and it seems to be working. So, you know, that's what I would say. Let's see here. What other questions do we have? I notice some of these stocks trying to rally. You know, Blocks is trying to hold the 20-day moving average. Truly, I think, is a short here, but now you're coming down to the neckline. So I'm wondering, you got a head and shoulders. Initially, this is a late-stage failed breakout. You rally up to the 50-day. now it looks like it wants to go lower, but I would tend to watch this as a little undercut here of these lows, and it may bounce back because you have come down 1, 2, 3, 4, 5 days in a row. And on this basis, I think I would be looking for the stock to possibly bounce here. And so it might be a place to take profits. I notice also Lulu is breaking down, and it broke the 50-day. So last week someone asked me, what would it take for you to get bearish on Lulu? And I would have to say that a breach of the 50-day moving average. Volume picked up. It wasn't above average, but now it's starting to break down in earnest, and that's getting pretty ugly. So it's taken this some time. Here's your head and shoulders. It's taken some time to break down, and you've had to form a couple of shoulders, which is not unusual. So stock's starting to come off now, and it's looking pretty weak. You can still see some of these other Bible gap ups. Align is kind of still working, more or less. NXPI is still working, so hanging in there okay. Amazon is basically hanging out. Now, one of the things that bothers me here, do you like this setup, Dr. K, or is this thing taking too long to get going?
Well, Amazon's it's not the 20-year-old sprinter it once was. It's going to be a slower name. It's kind of like a Google, So take that into account. If you're going to trade this one, know that it violates the 50-day. It tends to use the 200-day more for support. So just know that. I mean, there's nothing wrong with trading a slower stock. Just you just have to know how to handle it. And if you look at a stock like Google, the same thing applies. It tends to obey its 200-day. If you bought this thing back in September, or rather July of last year, and you used the 200-day, you'd still be sitting in the position. Nothing wrong with that. You don't all have to be in super fast names, so you just kind of know your risk tolerance levels and your investment style.
Yeah, exactly. And but Amazon, I would say one thing here is that after you have a Bible gap up, it's moving sideways. I'd like to see the volume dry up on the downside, and it doesn't seem to be doing that. It's the volume. You got above average volume selling in here, and that's a little bit troublesome for me. Maybe it needs more time in here because it is a second gap up in the pattern. So, when you look around, you see Amazon, Google, Priceline. These are your big NASDAQ names that are trying to hold up. So they look okay here, and they're trying to hold up. But I don't know if they're going to produce the kind of leadership you had with this. This is Facebook now. Now it's flashing blue or turning positive on the day, and you got a pocket pivot volume signature. But Netflix, is another one here, kind of sputtering about. I don't know if this is setting up to move higher or what, but it's hard to say given this big outside reversal. But I would think if some of these leaders start to falter, then what you're going to want to see is some new names step up. And it's not like you're seeing a lot of new leadership emerging. You're seeing some stocks trying to make comebacks here after bouncing off the 50-day moving average or whatnot. So it's a little bit. A little of this, a little of that, and we'll just kind of see how this pans out. Powi is interesting. Power Integrations. Remember this one, Dr. K? I remember playing this one back in 90.
Yeah.
I think it was 98.
That's right, late 90.
45% earnings growth announced today. You got a nice big breakout. The only problem with this stock is that it trades 145,000 shares a day. So I don't like that. I just have to say, it's just not something I'm really interested in at all. That's why it doesn't hit my radar screen. But, group's rank is 129, so that's pretty weak too. But a nice move, but it's a thin stock, so really not anything I'm interested in. Thin Lizzy, yeah, definitely. Let's see. Looks like we're through our questions. We got 5 minutes left. Let's see, I want to look at a couple other. This is another Bible gap up that has worked recently. I think we did talk about that one. Just looking down my list. Kihu, thought I'd talk about this one. It's hanging along the 50-day, hasn't violated it yet. I guess earnings come out in the middle of November. And so stock's trying to build a base. It's had a big run, so it's entitled to try and build a base. Tried to break out here, but that failed. So, again, there's your breakout, and the breakout doesn't work. So what else is new? the other Chinese internets, YY, we looked at Baidu, which is, coming in, failed on the Bible gap up yesterday. YY, that's a crazy looking stock, and I'm not one I'm going to play. Lumber Liquidators, you had a Bible gap up. It's been a slow mover. You're now 6 days after that without going anywhere, so you're using the low here of 111.76 as your quick stop on that position if you're short, or long rather, Lumber Liquidators. You can tell where my mind's at. I'm talking about short, letting that bleed through. Lock is a gap up move yesterday. This stock has, I've been watching this for a while. I'm a LifeLock member, actually. I have been for a long time. You have 20% earnings growth. You have a gap up move here, which I guess is Bible, using a low of 14.90, and it's moving higher. So it's also a breakout to the 15.21 level, which is a little bit extended, so you kind of want to watch that if you're into the stock. But it's not one I buy. It's a little bit, it's kind of thin. It trades 923,000 shares for $16. Like, that's kind of thin. And I remember AFOP was like that too, and AFOP is a big flop here, violating the 50-day all over the place and looking pretty ugly. But that whole group is ugly. Sienna busting, Finisar busting. What are the other names? I think JDSU is another name in there. That's come apart in a big way. Look at that. This Infinera is what got them all busting in the first place, and that's a nice gap down. So it looks like that is off the table as a playable group. But anyways, the whole point of this is the AFOP. Another stock trades about 1 million shares a day, but it's a $18, $19 stock. It's kind of the liquid. It's not easy to trade a big position there. Let's see. Yeah, let's take a look at watching LinkedIn here. See, I'm thinking you get some resistance up here along the 226, 227 level. I still think this thing's heading lower. Watch for a 620 signal in here coming back. So I'm running a small position here since yesterday, and I may get heavier if it starts to break down on a 620 breakdown, but I've basically been holding a core short position here on this from up higher. Yesterday you had a perfect shot. If you were alert to it, it started out right at the 50-day. That was crazy. You watch that, Dr. K? Stock broke down to like 230 and then rallied back up to 251 and then settled down somewhere around 238. In the morning pre-open, it was dropping lower to like 234, 33, and then just before the bell, got back up above 240, right at the 50-day, and then it failed right there. So my thinking is, you could short that turkey right there, and boom, it breaks. I still think it's headed for this low or the 200-day moving average, so I'm still working a core position there. So VRX, Valiant is, gap and netting. Again, stock acting real well. I guess earnings came out here, and they smack it, so same old story. In a lot of ways, I hate this market in terms of just the whole idea of pyramiding positions and trying to do it the old way, as I say. Just doesn't seem to work as well. And you just end up holding stocks too long, and all your profits disappear, and it can be pretty... you can get dejected about that pretty quickly when you see something acting so well, and then all of a sudden, in a few days, it breaks apart. And I think the big example for me is ACAT. I know a lot of people were giddy up here as this thing. You had a pocket pivot down here. I think it's right here, and things has a big movement. It only takes it 3 days, 4 days, 5 days, I guess, max off the peak to give it all back, and that's just brutal. So, but it's a sign of the times. And I think you have to take that into account, as we've been saying. You take profits into rallies. Try to buy stocks coming out of subtle buy points. Like I was pointing out, what I'll be watching for if the market's coming in here, I'm going to be watching for some of these leaders that have formed some bases and have some time to do like Yelp back in August. It rounds out, has a gap up, it fails on the gap up here, but it holds tight along the 20-day and the 10-day. And then you start to see these pocket pivots as it's rounding out. You want to be watching for those types of patterns, because I think that's where you're going to get some mileage in terms of finding leaders that are turning back to the upside. And then the best moves occur as the market comes off its lows, and everything goes to a buy signal here somewhere on the market after the stock's already up 10, 15%. So you're better off trying to pick them off that way. And I think the pocket pivots are an extremely effective weapon to be using in this market on these types of stocks. And we put out the alerts on that. We've done it on several of them, from SunPower to Silica, or U.S. Silica Holdings, with the pocket pivots along in here, as it's very subtle and coming around. And there have been several others over the last couple, 3 months that have worked pretty well. So, we sort of keyed into this way of approaching some of these stocks that are sort of rounding out these bases in these roundabout sort of formations, as we like to call them. So, on that basis, I think that's what you're going to be looking for here as the market gets a little bit funky. Maybe it corrects for a while and then heads higher going into year end, and maybe it tops. Who knows? I don't try to get bullish or bearish. I can be long something and short something at the same time, and I'm not allowing myself to get locked into any particular way of looking at the market. As Jesse Livermore said, there's not the bull side or the bear side. There's only the right side, and so sometimes in this market, the right side is going both ways at the same time, which I guess is really not one side or the other. So I'm not sure how you do. Is that, would you call that bilateral trading or something? I don't know. In any case, Dr. K, last question. What effect, if any, has high-frequency trading had on these markets? Has it added to the screwiness to the markets? Dr. K, I'll let you finish up by answering that.
Yeah, it's in the FAQ because we were asked that many times over the last few years, and so we talk about it quite extensively in the FAQs. If you just type in HFT or high frequency trading, you'll pull up I think more than one Q&A on that topic. But the short answer really is that it certainly does affect certain forms of day trading. It does change the way things are done on a short-term level, and knowing that some of these people, some of these traders had to reinvent their rules if they want to stay in the game. When the market has a material change that occurs, it's best for if that affects a model, then the model better adapt to that material change.
Yeah,
and this is the HFTs don't really affect so much the the ability to pyramid and play an O'Neill stock in an O'Neill kind of way. It hasn't really affected it that much. What has affected playing stocks in a pyramided way is quantitative easing, but not the HFTs. HFTs, we noticed in 2009, 2010, a lot of the day traders getting knocked out of the market, and simply because HFTs do create, call it riptides, new riptides in the market that cause problems for existing traders back then. Traders, as in day traders.
Yes. And the market, I would say it's definitely, I think decimalization has been bad for the markets. I think the markets are less stable. You'll see things spin a lot, trading at pennies, and that throws things off. In the old days, something would trade, at a quarter, at a quarter, at a quarter, at a quarter, then boom, 5 teenies, 5 sixteenths, 5 sixteenths, 5 sixteenths, and then it would boom, go up to 3/8, 3/8, and you see stocks trade that way, and you'd see the bids and asks moving up in the sizes and all. And now you can see the stock, 42, 43, 44, 49, 53, and then boom, it's going up to 70 something, and all the way back down to the 40s, and the pennies are just spinning all over the place. So it's like playing a slot machine sometimes. Anyways, I like what somebody says. Being short and long at the same time is bipolar trading. So I think this is a bipolar market, and a bipolar approach is what works best. Anyways, I thought I'd leave you guys with one last little idea here. I'm watching this ARMH, ARM Holdings, which you can see it had a breakout here. So you had a cup with handle breakout, kaboom, and it fails on heavy volume after earnings. This is a type of setup I've noticed on late-stage failed basis, assuming that's how this is going to pan out. But usually what you'll have is the first break. If it doesn't go through the 58, it'll bounce off it a couple of times. So you had one bounce here, two bounces here. And you'll find resistance somewhere around the 10 or the 20-day moving averages on the bounce. And roughly, and it's sort of a 50% retracement of the down move. And then they'll break down. So I'm kind of watching this. I have small position short in this right now on the basis that it will, at this point I think I'd use the high of the day at 47.84 as my stop. Or if you want to give it more room, you can use 48.79, which is really only a couple, 3% away. depending on how you want to run something like this. But I'm looking for a breakdown through the moving average. So that's the 50-day moving average here from here. And this is a late stage failed base. If you look at, whoops. Remember we thought this was a head and shoulders way back when, but a lot of times these things will come out of a head and shoulders and they'll form a big ugly cup or something like that, and then they'll break down. And so let's see. I want to make this a little smaller. But if we look at ARMH, it has had a long run all the way back here. Long base comes out, and so it's had a long move. So it could come in a fair bit, and that's what I'm looking for right now. So anyways, I'll leave you guys with that little short idea, and probably everybody will do it, and it won't work. But in any case, it's something I am working right now, along with Expedia and the LinkedIn. And Trulia coming off a little bit more, 39.90. But this is where I'd be looking at probably taking a short-term profit here. And of course, I'll do that, and it'll blow apart. But you got to work these things carefully, because you don't want to move it up in your face. Anyways, that's all I've got, you guys. Thanks for showing up as always, and we'll catch you again next week sometime. Take care.
So long, everyone.